Thursday, September 1st, 2022, Monaco 64, home of alternative economics and contrarian views. One of the viewers wrote a comment the other day asking me to talk about how inflation robs savers. He's trying to convince his mother-in-law to take her money out of the banks and maybe put it into some gold and silver or even buy an asset. So that's what we're going to look at today, the parasitical nature of our current banking system. And it's been going on for over 300 years with the creation of the Bank of England, central banks. And I'm going to refer to kind of a controversial book. I don't agree with everything Captain A.H.M. Ramsey says, but his description of the system is very good and will help people understand what really goes on. The book is The Nameless War. Here you go. Who was Captain Ramsey? Well, he was one of the MPs who was imprisoned during World War II because of his views, political views towards, as pertain to the war. Before we start, I thought I'd start a little bit with the markets instead of switch it around a little bit, because I see that what's going on now is really significant in terms of the bond market. I've been speaking for the last month that I thought we'd have a major sovereign debt crisis this summer, and I think it's kicking off. We're seeing yields everywhere around the world rise. And we're also seeing the stock market and commodities now to some extent come off as well, especially energy. And here in the UK as well, I spoke about yesterday about the gilt market, and it's getting even worse this morning. For example, the 2-year gilt yield yesterday was around 290. Right now we're already at 309. It's up another 8 basis points. So yesterday it continued to rise after I spoke, and this morning it's continued to rise again. I spoke about that 2.7% level on the 10-year gilt yield. Well, we're already at 290 almost here. We're at 289. We're up another 9 basis points. Why is this significant? Well, it means, as I said, that the era of easy credit is over. And our economy is based solely on, well, almost virtually solely on easy credit, on people borrowing and spending, governments borrowing and spending. So I think it's going to be a pretty rough road ahead economically for the country, and also for other countries in Europe, of course, because we're seeing energy prices come off. Yes, that might help a little bit the cost of utilities, but it's a little too late. And now with yields also going up, well, that's going to increase the cost of paying mortgages, servicing debt, rolling over mortgages as well that are coming up next year in the UK. It's going to impact rent because landlords, a lot of buy-to-let landlords, they have mortgages, so they have to pass on the costs. It's a disaster, I think. And even the U.S. Treasury yield curve now, as we speak, for example, the 10 years at 320. Up until last week, we were below 3%. It's up another 7 basis points this morning. And the 2 years at 350. So it's inverted still, of course. And the UK yield curve is inverted as well, the 2s, 10s. So I think this is quite serious here. So now let's look at how they, through the book here, the mechanism through which they basically rob you of your property. Let's go through the mechanism. And this is on page 17. And this is what he says here, the real objective of the glorious revolution was achieved a few years later in 1694, when the royal consent was given for the setting up of the Bank of England. And he puts that into bracket quotations because I guess he doesn't believe it's a bank for England. And the institution of the national debt, that's very important as well, and we still have the national debt. The charter handed over to an anonymous committee the royal prerogative of minting money. Yeah, royal prerogative of creating money out of thin air. That's what they do at the Bank of England. Even one of the founders, Patterson, said that the bank have the privilege of creating money out of thin air. Converted the basis of the wealth to gold, so I guess they turned the country from like a silver standard to a gold standard, and enabled the international moneylenders to secure their loans on the taxes of the country. That's another important aspect as well. Instead of the doubtful undertaking of some ruler or potentate, which was all the security they could previously obtain. So what does that mean? Well, it meant that before a central bank, before the national debt, the king or the potentate, they had to put up their own collateral. They couldn't make the public put up the collateral, so to speak. And that's what the Bank of England, that's what the national debt does. And that's why the national debt is such a scam, I would say. And this is an interesting part as well. The political and economic union of England and Scotland was shortly afterwards forced upon Scotland with wholesale corruption and in defiance of formal protests from every county and borough. The main objects of the union were to suppress the Royal Mint in Scotland and force upon her too responsibility for the national debt. The grip of the moneylender was now complete throughout Britain. The danger was that the members of the new joint parliament would sooner or later, in the spirit of their ancestors, challenge this state of affairs. So here's another interesting part, and why I always talk about politics being theater, being divide and rule, that it doesn't really matter who's in power. This is what he says. To provide against this, against the spirit of the ancestors for rising up against the state of affairs, right? He says, therefore, the party system was now brought into being, frustrating true national reaction and enabling the wire pullers to divide and rule, using their newly established financial power to ensure that their own men and their own policies would secure the limelight, and sufficient support from their newspapers, pamphlets, and banking accounts to carry the day. So here's the interesting part. And this was with gold. Now gold isn't even used in the system. It's all based on nothing. So he says, gold was soon to become the basis of loans, 10 times the size of the amount deposited. 10 times the size. Well, that's fractional reserve. If you put an ounce of gold, you can lend 10 ounces. It's still going on today in the COMEX and LBMA. In other words, 100 pounds in gold would be legal security for 1,000 pounds of loan. At 3%, therefore, 100 pounds in gold would earn 30 pounds interest annually with no more trouble to the lender than keeping of a few ledger entries. So there you go. They're actually earning 30%, not 3%, if you account for the fractional reserve. And here's the parasitical nature of the system. We can see how it works. The owner of 100 pounds of land, 100 pounds worth of land, however, still must work every hour of daylight in order to make perhaps a 4% return. The end of the process must only be a matter of time. The moneylenders must become millionaires, well, in this case now billionaires. Those who own and work the land, the Englishman and the Scotsman, must be ruined. So there you go. That's how it works. It's very simple, and it's not just the landowners now. It's anyone who does any productive work, anyone who doesn't really work for the government, because anyone who works in the public sector, they earn from our taxes. And that's why the national debt and the divide and rule is so important. And the other thing it does, this system, the very wealthy at the top, the people well connected to the bankers and to the big corporations, to the media, they get easy access to these loans. So what they do with these loans is they buy more and more assets. And by the time this credit gets to the general public, prices of assets are a lot higher. And now it's starting to affect prices of real things, of the basic necessities. And that's why the system, I think, is under threat. And it would be a great thing if the central banks were to go the way of the dodo bird. So that's the way it works. It's so simple that people don't believe it. And that's why they make it very hard for me or anyone else to open our own banks. You have to go through a lot of hurdles, have a lot of money to open a bank. Is it any wonder that there are not many banks here in the UK? It's a really good business when you can lend money that you don't have. And they talk about as well, a lot of times people talk about loan sharks, that they're earning too much. But if you look at the mechanism of fractional reserve, the bankers are actually probably earning a lot more, because they're lending a lot more than 10 times on their gold now, even though we're not on a gold standard or a gold exchange system. Gold is still important because that's where the current system derives from, as we saw through that book. So that's how it works. And usually they're able to keep this inflation quite gradual. They don't want to overdo it, because people will realize that they're being robbed. And that's why they have a problem right now. They try to keep the theft at just 2% a year. And that's why I think when they say they have an inflation target, it's just ridiculous. They're still stealing from you at 2%. So now you understand why the national debt, the central bank, and the fractional reserve system, they're all connected. And as it was said in that book, prior to that, the monarch, the potentate, whoever was in charge, if they wanted to go on some kind of adventure, a war, they had to finance it themselves. The general public was not expected to finance it like we are now, and that's all part of the system. So I hope that helped your mother-in-law understand what's going on, and why, to keep money in the bank like this, especially when rates are less than 1 here in the UK, and we've got inflation at double digits. They're really robbing you there, big time. And some people might say, oh, but it's because of the supply chain, all the shortages. Yeah, partly, but if there wasn't as much currency and credit out there, it wouldn't be as bad. And I think that's what's happened. The people the Russians and the Chinese, they realize now that, especially the Russians, that in 2020, with all the money printing, and Putin said that a couple of months ago, that the West just printed these mythical currencies out of thin air to buy things from the poorer countries. And that's why the poorer countries are having such a tough time now surviving, because we're printing this money out of thin air to buy their stuff. So with that, let's quickly look at where the markets are this morning. We've seen what the bond market is doing, so we'll stick to the other markets. We've got gold at 1707. That's down a quarter. Highs 12, low 02. Silver is down 19 cents at 1780. High is 1805, low is 63. The Dow futures is down 0.5% or 140 points. NASDAQ 100 futures down 133 or 1%. The S&P 500 is down 25 at 39.27 or 0.2%. The FTSE is down 1% at 72.13. And the Euro Stoxx 50 is down 1.3% at 34.67. To the currencies, the pound is continuing to move lower. The low overnight was 115.67. Right now, we're at 116.11, down about 0.1%. The euro is down a quarter at 100.26, so it's just above par. The dollar is down 0.1% versus the Swiss franc at 97.60. The dollar is up 0.15 versus the yen at 139.16, and the dollar is unchanged versus the yuan at 6.90. Let's have a look here. The dollar is pretty much unchanged here versus the ruble from yesterday. It's at 60. It has been though as low as 57.30 overnight. And I heard that the Korean won, the South Korean won, is having a tough time. Yes, as you can see here in this chart, the dollar is moving up against it. So Korea, I think they had a trade deficit that wasn't good, trade deficit data. So interesting to note that. And one of you also asked me to quote the Brazilian real. The thing is, the Brazilian real doesn't trade until later. For some reason, that market is controlled, and it doesn't trade 24/7. But yesterday, the dollar was at 5.24. So I'll keep an eye on that. Let's see where it moves. To the other currencies, we've got Aussie dollar down 0.1 at 68.35. We got the dollar up 0.2 versus the Canadian dollar, 131.57. And we got the Kiwi dollar down 0.2 at 61.05. To the general commodities, yes, crude oil has come off quite a bit in the last, this week, actually. We were almost back up to 100 WTI. Right now we're at 88.57. It's down 0.7%. Brent is at 94.70. That's down almost 1%. High grade copper is down 1.3% at 3.47. And US nat gas is down 0.6 at 9.06. And I've noticed that the Dutch TTF nat gas has come off significantly. We're back down to like 250 after being, we're at 228 and we've been as high as almost 350. So what I think is happening here in the markets is, a liquidity crisis starting. We're seeing all assets being sold. We're seeing government bonds. We're seeing stocks, commodities. The dollar's benefiting from it, but as we know, the dollar is also just a credit instrument. And I expect real things to do well eventually, especially gold and silver, because that's the base of the current monetary system, even though it's not official, of course, but it's where it all started with gold and silver. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day. Take care. Bye.